Wednesday, November 27th. Quick one-up video for you wonderful ladies and gentlemen. VIX just languishing at the lower end of range. It has been trading in these 14s up to the high to mid 23s. And I think that it's still a good opportunity to put on hedges here or even outright short bets for later on. Maybe you want to put them out in February or March. But I do like using this opportunity with a low VIX to put on some put protection for a year-end rally, considering we are seeing a little bit of weakness in the big mega cap tech names. I think some of that also has to do with some of the economic data that came in. GDP was a little off. PCE was a little bit hot. Overall, I think that we're seeing this constant rotation back and forth, but it is a little concerning that the semiconductor stocks continue to remain weak, particularly the leader, NVDA. As far as SPY goes, we are chilling around that 600 level. We're not really committing over it, though. We only had one close over it, and that was on Tuesday. I think the bulls are going to need to get up over and stay up over that 600 to, let's say, 600.85, which was high of day. If that happens, we can go up to the 604.35, which is the 2 times range. And if we were to do the full Monty up to channel high, it would be roughly 609 if it did it on Friday, although Friday is going to be an abbreviated session. Obviously, Thursday's closed for Thanksgiving. Happy Thanksgiving. And then Friday is Black Friday, and the market closes at 1 p.m. with a 115 ETF and index options going to 115. If SPY weakens up here, we get back below 78.6. That would be 596.68. Then I think we could pull back to the 10 MA, which is currently 593.42 and rising. Generally, pullbacks to 10 and 20 MAs are buyable. Below there, I think we target 50 MAs, and the 50 MA lines up with primary trend and channel low, currently 581.54 and rising. With regard to the Qs, a little laggy today. We did fill in that 11.14 gap at 508.69 and have just been chopping around since. Today tested the breakout once again between the 501.35 to 503.52. As long as that area holds, it's still okay. Below gets a little bit slippery. I'd feel better up over the 508.24 reference high. By the way, if this were to do the 2 times range, it would be 525.30, and if we did the full Monty to channel high, 532.70. But by the time we got there, it could line up with the 2.618 at 540.10. With regard to NVIDIA, it found some support at the reference low from Halloween 1031 at 132.11. I think there could be some room down to the 100 MA, which is currently 126.01. That lines up at the green channel low primary channel here. But we don't stand on ceremony. If we were to have a higher low on Friday and or clear the 137.22, I think we probably bounce up to at least 140.76 and maybe even the 20 MA at 142.24. Apple has actually been surprisingly strong. It's been trading in a range. I had said I thought that the breakdown on earnings on 8.5 was a massive look below range because the subsequent days just took us right back up into range. We have a bit of a dubstep setup, so if you want to use the 233.81 low of day as a stop, I'm good with that. Anything below 232.92 I think is a short, probably for a pullback, maybe even to the 20 MA at 227.24. We do know that 232.92 up to 237.49, it used to be 237.23, but we did have a little bit of move above there, tends to be resistance. So I would be selling into that higher end of the range because traders do what works until it doesn't. Broadly speaking, the SMH is just around the 200 MA here. Usually if we trade through it and back above it, it's a buy, which did happen today. So keep an eye. If we were able to clear the high of day at 239.80, then I think we could pump up to 50 MA at 248.11. Anything below low of day to me now gets suspicious. 234.17. I think we'd come down to 232.04 and possibly get slippery down to 214s, 215s. Be on guard with that, but I do like that it was able to hold the 200 MA today. The googliness is back up to the 169. That area needs to clear and hold. It had been support. I wonder if it'll be resistance now. I was really looking forward to a move down to channel low, closer to 160.69 to 159.74. By the way, that 160.69 would line up as the 61.8 of the range, and channel low, which to me would be a buy. Microsoft had shown a little bit of initiative yesterday, but then today again stalled at the 426.97 to 430.82 reference resistance. After that, by the way, it's 436.73, but I think you could use today's high of day at 427.23 as a trigger for a long or as a stop if you're short. Bitcoin hit the 100K, at least in the futures. It's still acting pretty well. We're over the 10 MA, currently 94,908. As long as we're above there, I think it's still higher prices. I wouldn't be surprised to see this ink a new high. If it were to clear the 100,000, it's in clear air and could keep going. If we did the 4.236, that would be 124,639. That would be impressive if that were to happen. I don't know that that's a fait accompli, but I don't know that it's not. As far as gold goes, we had this rally up and it stalled on 1122. It held the 10 MA, which is okay, but we are now stalling between the 20 and 50 MA, so bulls need to get over 246.38, which is the 50 MA. Bears need to get it back below 242.80, and I think anything below 240.64 is a neckline break for head and shoulders, and you could see significantly lower prices. I would think at least to the 911 gap fill to 232.25. If we can clear the 50 MA, I think we'd probably mosey on up to channel high at 251.72. TLT is acting pretty well for us. We had that set up with the gap and go on 11.25 over the 20 MA. It did pull back a little today, had a bit of a doji. We stalled roughly around the 250 MA. There are some gaps to fill on the upside: 93.86, 95.31, 96.74, which is a significant one because it's just below the 61.8. And then 98.49. I think they all ultimately fill, but I don't think it's going to be right away. I do think that the 95s through 97s are going to be some pretty stiff resistance. Tesla has also been a pillar of strength, although it is showing a little bit of weakness. We held the top side of the green channel, which is always encouraging. Bulls do need to get at least back up over the 10 MA at 336.06, and I feel better over high of day at 342.55. If that were to happen, I think we go up to 358.64 again, and then we'd see. Ultimately, this could go up to the 403s as long as the market stays strong. If we fail below low of day at 326.59, we probably come right down to the 20 MA at 313.45, so that could be a quick short. After that, the top side of the yellow channel, we have a channel within a channel, would be, depending on how long it took to get there, roughly about 290. If you want to put on some hedges, I like using 270 as a lower strike because that was the big breakout area. If you want to buy 300, sell 270, or buy 320, sell 270 with an overwrite down around 250, I'm good with that. The 250, by the way, would likely be the 100 MA by the time it got there, and maybe even the 200 MA. CrowdStrike got wackarooed today. I've been thinking that could maybe fill in the 11.5 gap to 307.58, but we're still within the trend and channel. I think that short term there could be some support at 332.20 to 337.70, which is kind of low in 20 MA respectively. If the bulls can get it up over high of day though at 359.22, I think it goes right up to the old highs around 398s. Generally speaking, I still like using up opens to trim gains. Clearly the bulls are not able to get up over and stay up over the SPY 600, and the 6,000 roughly in futures has been some resistance, even though we are trading a little bit above it now. By the way, in the ES, 59.90 quarter is the must hold, and in the Qs, 21,054.75 up to 21,121.75 needs to clear. Obviously, as we've discussed, Qs are lagging SPY and SMH are lagging Qs. That's not what we want to see. We want to see the more momentum beta names leading, and if anything, it's been the exact opposite. I think a lot of that has to do with how fund managers hedge their portfolios. They often sell futures or sell ETFs, the SPY for example, to hedge against longs, and I think they're seeing their performance lag, so they're chasing by buying back those hedges, and of course that's dragging the indexes higher, which again causes more short covering. Seasonally, this tends to be a bullish time of year. We have the Santa Claus rally, and then January sometimes gets allocation money and tends to be strong as well. Seasonally, that is on traders' side, and traders like to do what works until it doesn't. It doesn't always work, but it usually does. Like and follow for more.